Okay, hello everyone and welcome to another video, and today we're going to do a video on how to have an edge with time and price. If you're new to my YouTube channel, my name is Martin Maidan. I'm a finance professional and the founder of Adea, a fintech company, an innovative fintech company that's calculating the swing days of the future for the markets and also the swing hours in that day with a pricing model, so we can minimize risk and maximize profit and scale our profits much faster than regular other methods. And there's also a video on this playlist, about scaling your trading as well using time and price. In the meantime though, let's get started and see how time and price is going to help us gain an edge. Now, when trading, we're always talking about a few things. One's like pricing the market, timing the market, and obviously money management. But having good money management isn't enough. Sometimes I hear people saying, well, if you have a so-so strategy with good management, you can still make money. That for me doesn't really make sense. And sometimes people do the heads and tails example, and that doesn't really make sense either. Okay, so what we need to do is have an edge where there is enough evidence for us consistently, so we can use that enough evidence to make trades in a consistent fashion with money management. So even if you've got the best money management on the planet, it's not really going to help you if you don't have a trading edge. And a trading edge is normally a technical analysis edge or a fundamental edge or some kind of a quant data analysis edge, whatever edge you might have for yourself. It doesn't really matter. But if you don't have an edge, or if you don't know what your edge is, you probably don't have an edge, and that is just a way to lose your money. So let's see how time and price can help us out here. Now remember, every video I do here is focused on time and price perspective, so I'm not looking at anything else or any other strategies or any other approaches to the market. Now obviously having money management is a must, and there is no two ways around it. We've got to have risk management, and it has to be a good one too. But even a good risk management is not going to save your neck if you don't have the discipline to carry out your edge. So you have to first determine in the market what your trading edge is in terms of your analysis, and then on top of that put your money management in there. And how can you build your edge? Well, first of all, you got to know technical analysis or your fundamental analysis, or you have to have figured out something that is giving you an edge. For example, at Adea, we figured out how to calculate the future swing days with a high degree of accuracy. We've figured out how to calculate the swing days with a high degree of accuracy, and we've also built a pricing model. So for example, if I have a price for the month, the week, the day, and then if the swing days and the swing hours come together with a price, I call that a bingo trade, because more often than not it'll give you a great trade. So that's been back tested, it's future tested as we're doing it with videos as well all the time. Also in the members area, you'll see that I've posted the whole month of May on the 20th of April. So from the 20th of April, we already know the full month of May. But more interestingly to that, I already know every swing day for the assets that I'm looking at here on the list. As you can see, gold, euro, dollar, Bitcoin, SP 500, Dow Jones, and Nasdaq. The highly likely swing day for each of these assets until the end of 2025. I've also done a case study for this channel as well, because I was doing work for a client and they asked for specific assets like Google. So I've also done a video on that. You can check that out as well. Understanding how to calculate future swing days is great, because when your swing day matches your technical price, then you're going to have a good trading opportunity. Whether you're swing trading, day trading, intraday, I don't care what you're trading, position trading. If you know the swing days in advance, you can match it to your price, money manage it, you're going to have a much faster way of scaling your account. I've also demonstrated how to scale account with time and price much better than with any other method, because your probability of success is much higher if you know the time and the price. Let's take a look at a few examples and get it off our chest. Now this is euro dollar. Now with the euro dollar, this is the swing day for this week, Monday, and then I've got Thursday or Friday. All right, so these days I've got to look at the market. But if I go 1 week back to the week of 28th of April and the 2nd of May, I'll see here that I've got euro dollar also having a swing day Friday. Now, having a swing day Friday last week and having a swing day Monday this week is interesting, especially seeing on the daily chart that it is in our green box, which is what I determined to be a target zone for us. If we wanted to buy, this would be a level to buy, and that's where the market ended up. So now, having a Friday and a Monday swing day, all I want to be thinking about is, if the market is low, I want to buy at a good price at a swing hour, right? I want to know, because I've got the swing hours as well, not just the swing days, but the hours, and these are the vertical lines. If I bring this down a little bit, we're going to see what we're talking about here. So Friday, let's narrow this down a little bit here. Okay, this is Friday. Okay, so as you can see, Friday market makes a big jump up, comes back into Monday. We're thinking about just buying. Okay, if you're going to buy and Monday's a swing day, then the next swing day shouldn't close below that swing day. If it does, then we've made a mistake. That's why your risk is minimized if you know swing days and hours. So all we're really thinking about, if you grasped it, is that trading on a good swing day at a good swing hour, and that's basically all we need to do. And as you can see here, let's take a look. If I just circle these, now this is Friday, so the market makes a low. Okay, so this week I'm just looking to go long. So every time I want to go long when the market is low, long, you can see I'm always making money because my bias is to the upside. Okay, and you can also check out last week's swing hours as well. So if I go, this is 28th of April, so on Friday I would have known the hours. Let's get rid of these. Okay, so on Friday, you can see I've got hours as well here. So understanding what time we're going to get into the market on Friday is also important. All right, and that's your Friday swing day. Now, take a look at Tuesday. Look at that swing hour. Remember, the bias is to the upside. Every time the market comes down, I'm thinking about going up. Every time the market is down, this is Wednesday, we're thinking about going up. Now, today, I did a video today on this as well. In fact, today is the 7th, and when I did that video, guess what happened? I entered a trade as well. Why did I enter a trade? Because it was a trade hour, and we were quite close to price. Remember, we want to use time and price. Now, if my bias is to the upside, because of the swing days, if I want to go up, right, what I need to look at is the trading hours, these vertical lines here, with a price tag. And the price tag here basically is this 1325 I've marked in, because today that 1325 on the daily PST is going to be here. You can see that 1325 price comes from this PST level, which is 56.58. Now 56.58 corresponds to a price. The PST indicator is not a wiggly line. It gives you a price. It says, listen, dude, you want to trade, that's your mama. And that is 56 right there. Okay. Oh, that was not a good one, was it? Let me do that. This is the price zone there, 56. Now look at that, 13.25. That's your price. So having this precision pricing, 13.25, then all I have to do today is look at 13.25 and look where the market bought, right on 13.25. And because the market bought on 13.25, now all I have to do is check the hours and then say to myself, well, this was a trading hour pretty much bouncing right off 13.25 here. Okay, right there at the trade hour. Now this was 4:30 a.m., 4:30 or 4:45 a.m. my time in the morning. Obviously I was not trading then, but when I was doing the video, it was a trade hour and we were right here. So I said to myself, okay, let's buy here. Why? Because it's pretty close to the PST level, but more importantly, because the market already bounced off the PST level, I did not have to put a stop loss all the way down here. What I did was I put the stop loss when I entered the trade right under, oops, let's get rid of that, right under the low there. Now I entered 2 trades on this one, and the first one was to cover here. You can also see that here, I think. Let's do this. Okay. All right, so let's just do it. That's the trade from this morning, right? So on the 7th of May. So if you think about it, the trade is covered already. The stop loss now, I can move even more forward because I know the next trade hours. Now this is interesting. Look at this. I had a trading hour here and I've got a trading hour here in the market. Now this zone is important for us because here the market could go the other way. Now knowing this hour is great because now I can say to myself, well, wait a minute, if this thing doesn't go up, this time period here, which I determined from the 20th of April, and now today's the 7th of May, let's go into the 7th of May, which is a Wednesday, right here, it's that 6:57:30 my time. Remember, the time zone here is UTC +3. So now I understand that the market can, from here, can sell off as well, and obviously can stop me out. So I can say to myself, well, wait a minute, I'm going to keep an eye on this, or it's coming close to my dinner time right now. So I can say to myself, well, you know what? I already took some profit. I'm going to put the stop loss up here. I'm not going to take a risk. Okay. And I shouldn't have to either, because this is going to carry on until 7 o'clock, in fact 7:30 as well. So this time period for me is crucial, and now I can manage the trade not just according to price but according to time, and I don't have to stand in front of it looking at it for hours and hours. This thing is the same for setups as well. I don't have to sit in front of the computer waiting for setups all the time because I know what time to trade. And if I've already entered the trade, I know what time I need to manage these trades. I know what time I need to look out for. So things, if they do go pear-shaped, what I'm doing is minimizing my risk. And that is an edge. Your edge is not just entering a trade and making great profits. If you can time the market as well, things can go wrong and you will be the first person to know about it, because you say to yourself, well, wait a minute, my direction is up. This trading hour, if this trading hour is correct, we should have something to the upside. But if it's not doing it, then you say to yourself, okay, something's not right here. Like my gold trade I did in the previous video as well. We'll take a look at that too. So now I can move the stop up and I can say to myself, you know what, that's London support, that's New York morning support. What I'm going to do is just take the stop loss and maybe just put it under the London low here in case there's a stop sweep, and that's the pivot there. Now you can see my risk is really minimal and the trade is already covered. Okay, so I've got nothing to worry about. Edge, another edge you get with time and price is stress-free trading, because nobody else on the planet knows the hours to look out for except GlobalTrader.Club members, and that's already gold on its own. Talking about gold, let's take a look at that gold example. Remember with gold as well, we had a swing day. Let's take a look at gold. Now with gold, this week we had a swing day Monday, right? This week we got Monday and Thursday. If you go back to last week, last week you'll see that I had Monday, Wednesday, Friday. So again, Friday and a Monday. Great. But let's take a look at Monday and Wednesday from last week as well. Look at that, Monday, Wednesday. See how the market just went down, comes right into my price zone. It's a Friday, it's a Monday, and on Monday while I was doing the video, remember I put a trade in right there. I think I was doing a video on recession proof trading or something like that. Okay, and look at that, I entered the trade around here just under the weekly pivot. Now normally if I didn't have timing on my side, I would not enter that trade under a weekly pivot. I'd say to myself, I'm not going to enter that trade. Weekly pivot is for me a place where the market needs to break out if I want to buy it. It needs to break to the upside if I want to buy it. It needs to break to the downside if I want to sell it, because it's a strong level. But knowing the timing, look at this. I've got the timing here, right? And I'm looking at it, and the market hasn't gone down from here, okay? And I know Friday was a swing day and we were at a low. So Monday is a swing day. So this is a good place to buy. But I hadn't bought in case the market came down here to go up. So I waited. Once I started seeing the bars are just going sideways, also watch the video for the 5th of May. You'll see that I talked about market being volatile and a breakout being imminent. As the market was here, I saw it's not turning around. So this must probably be a breakout trade to the upside. So I entered here as quickly as I could. And I hadn't put a stop loss, but afterwards I did say in the video, you know what, I am going to put a stop loss, and I put a stop loss right under the low there. Let's get rid of that. Okay, right under the low there. So I entered the trade here, and the stop loss is here just under the low. Why? Because if I made a mistake, I don't want to be in it, because I've timed the trade. And that trade actually is gold. Which one is it? It's that one. 5th of May, gold. Okay, and what was the entry on that price? 3,263. All right, so 3,263, just under the weekly pivot right there, because the weekly pivot is 65. All right, with a tight stop loss just there. All right, very tight, as you can see. And then the market just took off. Now, if I was in front of the screen on that day, unfortunately I wasn't, so I had to take profit at 3,300. I had 3,303 for a target, but I put the target just underneath it, and it just took it straight away. If I had been in front of the screen seeing this move here, I would have pushed the stop loss to the next trading hour here, where there is New York, because I said it should flow into New York if it breaks out. So be careful for this hour. And look what happened here. Now remember, because Friday and Monday were swing days, our bias is to the upside. So we want to be going up. Okay, that's your Friday. This is your Monday. Now market comes back into the trading hours. Let's say you are confused. I mentioned this in a video before as well. And you said to yourself, well, maybe the market will sell from here to buy later on. Okay, that's a fair question. What do? You do exactly what I did here. You wait, because let's get rid of all of this. If you wait, if you understand, look, this is your hours, right? This is your hours, and that's the box. That's the high and the low you did in this time period. The minute this thing is going up and not going down, whoops, you are already saying to yourself, listen, this is going up. So then this becomes your swing hour, and then you can follow it up. And look what happened here again. Right there, swing hour. Market stops there, going sideways, going all the way into Asia. Beautiful. And that is what I'm talking about. So your edge is going to be time, price, and managing the trade, not just according to price, but time as well. Just imagine that. And this is the beauty about it. And that's how you can really make decent trades. And look here, for example, today in the video, I said, guys, we're in the middle of nowhere here. And gold's swing day is, when is it? Well, it's tomorrow. Okay, well, sorry, when this is not this week. This is going to be this week. Is going to be the 5th to the 9th of May, because we are on the 7th of May today. Now, look, swing day is tomorrow. It's Thursday. So why muck around? If we end up somewhere high, you can sell on a Thursday. Okay, from here, maybe you can sell. Or if it all of a sudden falls down again, you can do the retracement as a swing day and push up like we've got in these days. See the impulse, pull back into a swing day, you're going up. You see, swing day, you are going down. Why? Because the swing day when the markets are high. So knowing all this in advance, days to weeks in advance, you already have a great edge. Then all you have to do is mark your money management, risk management, and you can scale your account much faster because your stop losses are going to be much tighter than everybody else's. Okay, and because it's not a swing day, look what the market's really doing. It's just not doing much, is it? All the gas of the market is like out. So it's all just going sideways, nothing really to do here. And that's the same thing with anything you're trading. Let's take a look at SP 500 as well. Now look, that was a swing day. With the indices today as well, in today's video, the 7th of May, you can watch it tomorrow on YouTube. On the 8th, you can watch it. I said we should be selling off to the downside. And let's take a look at the hours. Wednesday, right? We haven't come to Thursday, Friday, so there's no video for that yet. 3, and I've got 6:57:30. So where's 3 o'clock? 2:30. Well, that's your 3 o'clock there. Market is up, and then a big sell-off. And then the next hours we need to look out for is 6:50 to 7:30. So if you sold the high there, your stop loss should have been just above that high. Then the next thing you're waiting for is this price zone. And if we calculated it right, it should come down into this zone. Now, two things can happen here. And I said be careful about it. If the market comes down here, we're either going to see a turn or we're going to muck around here and then it will break. So this zone has to be careful trading. I said the same for NASDAQ and Dow Jones as well, that the market should be selling. All right. And the same, let's take a look at NASDAQ. Same setup, because NASDAQ, let's take a look at NASDAQ. Swing day Monday, right? It had a swing day Monday. Dow Jones had a swing day Monday. SP 500 Tuesday. So Monday, Dow Jones, NASDAQ. Tuesday, SP 500, Dow Jones. So once you know you've got a swing day Monday, that's Monday there. All right? Monday, Tuesday, Wednesday. And that's basically what happened. Now look at the swing hours here. Look how just beautiful that's working. Trade hours, London buys, New York buys, goes all the way into there. Okay. Now on Monday, did I have an hour like that? Let's check it out. Monday, I didn't. I had just 7:25, which was there. That's just 7:25. It's a 15-minute chart. So market goes, touches the opening price, and then just falls off. Okay, but Monday was a swing day. So understanding Monday is a swing day and you are at the tops Okay, see, this is the top zone. This is a place where you want to sell. And this was a swing day from last week. All right, so that's Monday there, Tuesday, Wednesday. Sorry, this was last week. Wednesday, Monday, swing day, market selling. So today you'd like to sell. All right, and that's basically it. And what time are you selling? At trading hours there, 3 o'clock. Bang, market selling straight away. You could also look at the other hours as well in London. What do we add? So Wednesday, that's your 3 o'clock, 11:40. Let's see what London did at 11:40. This is London, 11:40, 11 o'clock, 30, 11:40 there. So if you opened your trade at the last, or on the next SPY, 11:45, your stop loss should have been just above the green line, not more. Because if you've made a mistake on the timing, you don't want to stick around. You just don't want to stick around, and that's fine. But you already have a bias. You understand Monday was a swing day. The market made a high and then sold off. So now you want to sell when the market's going up, and that's exactly how it should always be working for us. When we have a bias with a swing day, then we can trade it on any other day according to that bias, follow it to the next swing day. If the next swing day is going to be Friday there, then you can say, well, all right, today is Wednesday, so if this goes according to plan, that's your Thursday, that's your Friday. So where can we come down to? Then you got your targets. 44 on the weekly is 19,132. So 19,132 is going to be a weekly target there. All right, so just around there. Okay, and that's basically how you trade it. Now you got a bias, you got a time, you got a price. So minimum risk, maximum return, and that is the edge. That's the kind of edge you want. Stress-free, knowing high probability swing days that match your sell level or your buy levels. Also look here, look, you know, market is down and we've got a swing day. Market is up, we've got swing days. Market is down, we've got swing days. See how the market is always going with these major swing days that we have. So really, it's becoming like, you know when things are going to happen beforehand, and all you got to do is match it to your personal pricing model, or you can use the pricing model we have at the GlobalTrader.Club, which is the PST pricing model. And this will be the same for anything and everything. Whatever you're trading, whether you trade, I don't know, silver, palladium, whatever, corn, forex, like we do here as well. So anything can happen, but understanding the timing is really important. All right, and because we're at that time period now, let's take a look at the euro dollar, and you'll see, look how the market is coming down. You see what I mean? Now, being prepared for this is great. Okay, so now I've entered a trade where I covered my trade, and this was a trade hour, and look at the market move at the trading hour. So knowing this in advance, I'm not surprised. So if I get stopped out, I'm not worried about it, because this is a done deal. We knew this could happen and we were prepared for it. That is risk management, knowing things before they happen. Hope this video was helpful. Your edge, time and pricing, best way to trade. Have a great day.